Well, welcome, ladies and gentlemen. This is your host, Robert Roy. Hope you're all having a great day today. Let's go ahead and make sure you all can hear me. If you would go ahead and type the number 1 in the questions box to let me know that you can, I would greatly appreciate it. Well, thank you, one and all. Really good participation today. Hey, Rosemary, how are you today, dear? All right, fantastic. So let's go ahead and jump into our disclaimer. It basically says that I am not an advisor and cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade, setup, or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So Russell says, greetings from Reno, Nevada. How's the weather there, Russell? What's temperature like in Reno right now? In New York right now, I can tell you I have a weather station outside of my home, and it is 77 degrees with 6-mile-an-hour winds. It is just gorgeous out there today. So guys, a couple new things on here that I've started to add. So we've got a couple of online workshops coming up. Monster Market Movers is on August 30th. The next one we're doing, which is this Wednesday. And then September 12th, I know so many of you have asked about Fibonacci's. We're doing Fibonacci Secrets Revealed. And there'll be 2 free workshops on that. One will be Wednesday and one will be September 5th, whatever day that is. If you look under the free workshops tab. E-mini Trader Talk will be this Monday night, tonight. On demand, you can still have access to the previous Monster Market Movers and Cheapskate Trading. And of course, on Mondays, we do Power Hour. Now, guys, we will not have Power Hour next week. When the market is closed, we don't teach, right? So that's a day off for the market. It's a day off for me as well. So I will not be teaching on that day, right? And then here is the way that you can get in touch with me. If you guys want to screenshot it or whatever you want to do there. Russell said 82 going to 100. Well, it's only, what, 9? So 82 at 9 a.m., not too bad. 100 is still not bad when you're in Las Vegas, right? Okay, cool. So what I want to do is jump over, and we're going to start off today with some candidates that you guys are going to give me that you want me to take a look at. So you can start dropping your symbols in there now. And as you're doing so, let me ask you, do any of you have an interest in learning how you can make $11,750 in under a month? Any interest in learning how to do that? 1 for yes, 2 for no would be fine. Be careful, Nick. Sure, I might think it's a symbol, S-U-R-E. Okay, all right. So as we get to the end here today, I will show you guys that. So certainly a reason to hang around. How you doing, Steele? Good to see you. Cool. All right, so let's go take a look. First one was from Paula, which was PAS. P-A-A-S. I put P-A-S-S. All right. So for right now, I'm just going to take that off of there, that indicator bar. So we're looking at an $18 stock. Tough to do Fibonacci's on this one. I do see a move that was made here. Let's see if there's any value there on Fibs. And how we determine value is how much distance is left between any 2 of the Fib lines. So I need at least $1 between the 50 and the 618. I don't quite have it, but it is a Fib line. And the only reason I want to see at least that much is it gives me the potential of at least making some money on the trade if it moves in my direction. So as an example, one of the trades, Robin, you needed about 10, 14, you need about $17,000 to make 11. Or you needed $1,700 to make 1,100. Let's see. Okay. So as we look, let me go ahead and get rid of the crosshairs there. Let me grab a drawing tool. Okay. So here is that infamous H pattern right here. Right? You may think it's a very ugly letter. It's actually the prettiest letter in the alphabet. We moved up here to the 618. You would normally plan on a 1-2 line move, but we would also be scaling out of some of our trade here, and we would have been stopped out probably right about here, somewhere between these two candles is where we would have been stopped out of the last part of the trade. Great setup, just not a big move. $19.20 down to $16. So you had about $2.5, $3 move there. It's okay. It's just if you can get a little bit of a bigger move, it's definitely a better setup. So right now we're sitting at the 50, and actually let me do this. Let me go over to template number 2, where I actually have moving averages, and I'm going to hide the 144. There we go. All right. So just too busy on the screen with all of that there. All right. So you can see the entire Fibonacci now. Obviously a little bit busier. We are above the moving average at this point. We're sitting up at the 50 percentile level, right? We've failed at the 618 once before. We failed at the 50 once before, 1-2 line move. If we get the failure here, and this update was done today, so probably a half hour before we started. So if we can get the failure here, Paula, we're looking for the move down to $18, which there's a confluence. Confluence is when there are any two or more things happening in the same place, right? So I've got a Fibonacci level, which is a very strong level. It's a 50 percentile level. And you can see that over on the left-hand side here, 0.5. And, sorry, 382, which is not as strong. We're at 50. So that 382 is a support level, right? We've been here before multiple times. We actually hung around there for a month right here. And that's our first target, around $18. Our second target is around $17, also a confluence with the 55 EMA right there. Right? If you get the breakout moving up higher, I'd look for that 1920 level, the purple line, to be the level of strength, right? The new resistance again. And if we do go there, look for that rollover and a 2-line move to the downside. Let's see, Starbucks. I have not looked at Starbucks in a very long time. That was from Nick. So let's see. So it's always easier to draw Fibonacci's on a chart that has no lines on it, no other lines, meaning moving averages, Bollinger Bands, other indicators on the top. So let's see. So right to there. See, it's not quite $1, but you know, if we're within about a dime or so, it's okay. Again, I just as a guide only, I'd like to see it to be at least $1. And then we'll go back to the template with moving averages. Now, I don't switch back and forth for myself normally. Right? Normally, I am just drawing them right on the same template. All right, so you can see we are in a, right now, if I were looking at this and giving it a name, I have 5 different biases based on moving averages that I work off of. I have bullish, bearish, neutral, right? Pretty simple to understand. And then I have a bullish neutral and a bearish neutral. This right here would be considered bearish, but I still want to see my stock get down below the pink line, which is the ADMA. If it does, we're looking for a move down to about 53, and we're at about 54 with the pink line right now. And then from there, we're looking for a move down to about 50 as the next level, right? So overall, I like this as a bearish position, just out of curiosity. what could we do on options here? So let me pull this over. So if I were going to go with an option, and if you were looking at this for the next couple of days or so, right, how long does it take to move down from one line to the next? Well, we went from this resistance line, which is where we are now, 1, 2, 2 or 3 days we got pretty close, 4, 5, 6, 7, 8 days before we nailed it, and then 1, 2 days on the upside. So, if you look at 8 days, I'd be okay with the next 3 or 4 weeks of time on my option. So let's see, this gives me 3 weeks, so let's go 1 week further out. Let's go find, and so we're looking at 54. I'm going to come and just run right to the delta column, look for something for that 65-ish level. I'm looking at an 873 open interest, 70 delta, 165 by 174 for a September 22nd option, which gives me about 4 weeks away of time. I could buy an option fairly inexpensive on this position as a call option. If I wanted to sell premium, right, I'd go on the opposite side, and let's see. So if we go with out of the money option, right, so we come over here to delta, right, well, here's delta, but we're looking at the lower, actually, let me do this. Let's close that one up so there's no confusion there of where we're at, all right? So if we're looking at that lower option, right now the stock is trading at $54, right? So if you, $54.21. If you were to sell that $53 put, right? Well, no, can't do 53. We're going to look at, 50. Probably not a good one for selling premium, just because of where support is. It's too low of a price position, right? So I would be looking at the buying side only, 873 open interest, 63 is the one above it, the 52, so that doesn't work. So I'd be looking to buy right about that 53 strike. All right, so let's just move that out of the way. All right, Nick, hopefully that that helps. Let's see, SCCO. So guys, if you got some more symbols, drop them in. Let's see, SCCO, which is Southern Peru Copper. You're welcome, Nick. So I'm going to get back to the first template. I should have saved it. Let's see, I just want to delete those dash lines, those dash lines. They are lines that we'll put in there for an example. So I'll put a dotted green line for support, or dotted red for resistance, also for targets, right? Okay. Let's see. All right, well, I noticed that there is, here, let me just get rid of those. All right, I noticed that there is a Fibonacci to be drawn for sure back here, but we have surpassed that one already. There's another one right here. Right, and it looks like we have one in here as well. All right, so 36 to 36.78. Again, not big numbers in there. All right, let's go back to the moving average tab. Okay. So you can see we've had a nice move to the upside, quick pullback, and a fantastic run. We had a breakout of this zero line, pretty standard fib trade. Good breakout, push to the upside. Right now, for me to want to take this, Paula, for me to want to take this trade, I'd want to see the pullback to the 8, close near the 8, and a bounce. 41.5 and 42.25 are the two upside targets. Not very big as far as the amount it can move. Let's see. I don't know if it's an all-time high, but we definitely run into resistance. Ah, look at that. We definitely run into resistance right about here. Now let's go look at a weekly. Let's see if there's anything higher. There is. Okay. So we've got 1, 2. Okay. Let's go back to a daily chart. And let's bring it back in a little bit. We'll hit the scrunch key, which is the F11. All right, so you can see a little more of the lines now. This horizontal line right here, the blue one, the $42 level, was the recent high we had that we were able to see. Recent 2012, 2013. So that was that high right there. This one came back from a few years prior to that. Right? So look for the 41.5. You may get some resistance at that 42 and then 42.34. Right? But definitely want to wait for the pullback to the 80 MA before taking that trade. Tony's asking about Amazon. So guys, if you have not heard with Amazon, today is the official day that they closed the deal, scheduled to close the deal on Whole Foods, right? Big deal for them. There is a tremendous amount of talk around what the CEO of Amazon is trying to accomplish with this. I think the guy is brilliant, basically, but in a nutshell, first thing they're going to do is they're going to drop, as of tomorrow, they will start dropping the prices of some of their higher margin products. They feel that people should be able to afford good and healthy food. Amazon does, without paying through the nose. Right? Whole Foods has been chastised for years. Suits against them, articles written about them, threats to them for what they charge. They're ripping people off and so forth. So Amazon is looking to lower the prices. That's number one. Number two, they're going to start with selective Amazon Whole Foods stores, and they are going to start putting Amazon lockers in there where you can drop off product to return, or if you are selling a product, you can put it there to have it shipped, and you can pick your products up there as well. You're going to be able to use PayPal. You're going to be able to, not PayPal, your Prime account rather. You'll be able to use Prime in the Whole Foods stores. They're going to start selling some of the Whole Food products on Amazon, particularly the All right, guys. Let's see. We back. I'm sure we lost audio there for a little bit. Don't know what it is that happens with. All right, thanks, Jeff. I appreciate it. Don't know where I got cut off there, but basically, guys, there's a lot of great things happening around Whole Foods, the Whole Foods / Amazon merger. I think this takes Amazon into a major brick and mortar business without them having to try to build it. And they are still building some of their own. They're doing Amazon bookstores. They say, I haven't seen it, but there's one in Manhattan. They do not accept cash. You got to pay with your app. But anyway, Amazon, I love them as a company. I think they have done a phenomenal job. Right now, since their earnings came out, big gap up, and they've had pullback. Part of that could be the announcement of the purchase of Whole Foods, right? There's 2 or 3 other things going around them. I think they are a little bit overvalued at this point, right? Let me see. I have not pulled fundamentals up in here, and I know we changed the, there we go, the icon. So let's see. Their PE ratio, 235. So I'll give you an idea of what that means if you're unsure. 0 to 20 is an undervalued stock. 20 to 40 is fair valued. Over 40 is overvalued. We're at 235. Almost 236. So they're definitely overvalued. People are still paying for earnings that they don't have yet. That will come to an end at some point. It has to. Amazon is going to have to start making serious money. They're doing okay, but with what you pay for the share of stock, it is way, way, way overvalued. Now, I already have a Fibonacci drawn on Amazon. We are definitely in a bearish position. I would like to see, Tony, if we can get this pink line, the ADMA, down to the blue line, 51.38. Let's zoom in a little bit. There we go. If we can get it down to that, the pink line, down near that 951-ish area, right? Then from there, it looks like we make our move down to 915 and then about 900. Phenomenal potential move. You may see some hesitation on, let me see if I go here. You may see some hesitation, let's see, 1583, actually, better off if I do it this way. I don't feel like doing math. Let's see, 32 and a half, 15, 45, yeah, okay, we have to split this. So, and guys, I'll talk about this in the Fibonacci classes, but we need to add a Fibit in here. To 118. All right. So 933 will be our first stopping point, and then 915, call it 916, will be the next stopping point from there. All right. So Tony, that's what I'm looking at. So Patty said, where did you say you would post the analysis of the trade each week, on Facebook or Twitter? And did you say it would be on Tuesday? Yes, Patty. So it's going to be Tuesday. I don't know if I'll do it this Tuesday, but the goal is to do it on Tuesdays. And the only reason is today is Power Hour, E-mini Think Tank, and then Wednesday is Monster Market Movers, which is a tremendous amount of work. But I have got 3 or 4 candidates in there that I think are absolute freaking home runs that we found. So. But it will be, and then once I start, it will become every Tuesday. I'll do the analysis over the weekend, but I'm still in catch-up mode after getting back from Cape Cod. 4-hour drive there, almost 6.5-hour drive home. I'm still in catch-up mode right now, trying to get through that. But yep, it will be on Tuesdays, and it will be on Facebook. I still said Amazon plans to build floating warehouses in the form of blimps with onboard drone delivery. That would be awesome if they got approval for it. I can see the danger of flying over residential areas. Let's see. Okay, so Nick is asking for Alibaba. Let's take a look at Ali. Okay, let me, you know what, let me leave that up. Okay. All right, so we've got a nice bullish move on Alibaba. All right, all-time highs, you know, in that general vicinity of where we're at. That 177-ish level was the all-time high on Alibaba. They recently had their earnings. You could see how they did with that. Right, gap up on the earnings, good run. Now a little bit of a pullback, and what do we have at that 170.04 level is the 0.236 fib line, and 169.40 is the 8-period EMA, exponential moving average. Well, we are basically we're in a bullish neutral bias after today, meaning we're down below that 8, but still above the 21. So I would like to see us get back above that 170.04. That takes me to 177 is my next upside. 77 to 85 is 5 and 3 is 8. We're fine. So it would be 177 and 185 would be the two upside targets. The question is how long to get there. The way that Fibbits work, and again, I'm not going to teach them here, but the way that Fibbits work is they help us to understand, based on the average true range of a stock, in this case of Alibaba, how long does it take if the stock just went from low to high over the next X days, how long would it take to get to resistance? So it'd be a little longer than that. Obviously, it doesn't just move low to high every day, right? But it's going to take, it could take potentially, as we get this bounce up, 3, 4, 5 days. And look at the last time we made the move, 1, 2 or 3 days, depending on where your exit would have been, 2 or 3 days to get up to that 177 level. All right, so the potential is there for this over a very short period of time. And if we go and look at Alibaba, right, go back out and do the same thing. Go 4 weeks out from now and just full screen it. If we go 4 weeks out, we go and find that 65 to 85 delta. So here's a 64, close enough. 179 open interest, perfect. It's more than 100. I'm looking at 745 mid price. 745 is the entry. If I want to pick up another 2.5 points, I can. It takes me to a 71 delta. But to get the difference of 165 to 162.50, I'm looking at paying, we'll call it 745 to 915. So I'm looking at 745, 845, so that's $1. So 55, 60, 70, $1.70 to get $2.50. So I'm not buying a lot. It's not giving, I'm not getting a great bang for my buck. It's okay, but it's not a great bang for my buck. If you look at an options bell curve, all right, and I'll do my best here. I'm sure I'm going to mess up the picture, but let's see. All right, it should have been a little bit more of a curve in here, right? But the left side is a good one that I drew, right? If you look at that, we are probably right here with a 65 delta. And we're more here with a 74. So being, you know, somewhere in this sweet spot is the ideal. Right now, you could still be up here and have an 85 delta, and it would still work if the position moves in your direction. But bang for my buck, I get the biggest bang for my buck when I am closer to that angle or that curve right here. Right in that section there. I get the biggest bang for my buck when we're there. All right? So if we go back, put this back up on the other screen. If we go back and look, you know, I can get the 165 for $7.40. It's 30 by 50. The 740 is just the midpoint. It's all that is. Right? Not 750, 745. They know we're talking about it. They raised the price. Actually, what just happened? Let's see. Let me put this here. Let's go take a look at Alibaba. So we look at it from a 4-pack standpoint, which is this template, right? We've got a nice pullback. We're sitting right at support. I'd love it to close here and look for the bounce tomorrow for the entry. So let's go look at what our targets would be if that's the case, right? Oh, we said 177, 185. Okay, perfect, perfect. Patty, you are welcome. Oh yeah, we had a wonderful time. Absolutely phenomenal time. If you guys do go to the Cape, to Cape Cod, you definitely want to go out on the whale watching boats. We did it, and we actually saw 3 breaches where they broke water. And I mean, we saw sightings all day long, 4 and 5 whales at a time. It was great. We were out there for about 3 hours. So we did have a good time. Thank you. Let's see. So I'm going to do my best, and I'm wondering if it's not in, if the name is not in backwards. But so for Amgen, sorry, what was that, Nick? Quiprocata. Let's see. Zantania, I think. I got the right name there, the right pronunciation, Zantania. So we got Amgen. All right. So, oh, interesting chart. All right. So as we look, guys, let me go back and get a little more time. I know what I'm looking at here because the fibs are there, but let me go and just redraw or reevaluate. All right, so we pull back. You can see I've got lots of fibs drawn on Amgen. I don't get rid of them. I always keep my old Fibonacci in there. We had a good strong pull, move to the upside and a pullback, right? And what's happened? Well, right now we're kind of mixed up a little bit with our moving averages. Our lowest moving average is the 8. Right, which is our shortest period, right? But it's on the bottom. So if you're bearish, then that's exactly where it belongs. But when you look at that, the way a moving average should work, let me see. Okay, the way the moving averages should work is this. This is bearish. The shortest one is the 8. You can see them by colors here, guys. 8, 21 is green. Let's see, brown is 55, right? Forget about the blue for now. So, which is hidden in there almost. It's very faint. This is the right order of the moving averages. That makes it bearish. We're below the lowest moving average. It is the lowest one. The green one is in the middle. The brown one is on top. That's what makes it the lowest. I'm sorry, that's what makes it bearish. Well, when the moving averages are mixed up like that, they are not pink, green, brown, or brown, green, pink, from top to bottom, right? When they're not that way, and actually, let's do it this way. Brown, green, and pink. Right? I know it's a little faint. Right? But that's bearish. Right there. Right? Then we go ahead and we get pencil. Pink. Green, and don't worry about the shape or any of that, it's just the order. Bullish, right? And these would be perfect scenarios, right? Well, I don't have that on Amgen. When we look at Amgen, the brown is in the middle. So everything is all mixed up from that point. Everything is mixed up. So I would like to see the moving averages align themselves a little bit better, but we're not there. So with that being said, if I were going to take a trade on this one, Zantania, I would go ahead and I would look to take what I call an aggressive trade, meaning I would only do a small portion of my trade, not the full trade. Well, what does that mean? I would take 4 contracts instead of 10. I might take 1 contract instead of 3 or 4, right? A smaller number of contracts in the trade. And the reason for it is the moving averages are not aligning themselves. Now, could they get in alignment? Absolutely. But we're a little early to the party. If I were in a live workshop in a room where I could see all of you, I would ask you, raise your hands and tell me how many of you would like to go to parties. And most everybody would raise their hand. And then my next question would be, how many of you would like to be the only one at the party? Right? Most people say no, and well, that's usually a pity party anyway, right? Wrong type of party. But, guys, you're getting in too soon on this for me to be comfortable with a high probability setup. When you are learning to trade with Fibonacci's, when you're learning to trade the methodologies that I use day in and day out, you're going to do that for high probability setups. Will we miss out on some trades? Absolutely. We certainly will. When I do my options trades, guys, if I take, on average, I take 200 to 300 trades a year, right, on one style of trade that I do. That's not my retirement type stuff. That's totally different. I take multiple trades a week alone just on that. But if you look at just my directional options trading, 200 to 300 trades in a year, I guarantee you I miss 200 to 300 trades. But to me, it's not about taking a lot of trades. It's about getting rid of the garbage and letting the cream rise to the top, right? Actually, my strategies, the things that I do at Fibs, I am not even trying to teach you how to find good candidates. I'm really trying to teach you how to eliminate the bad ones. That is the mark of a true trader, is being able to do that, all right? So Amgen, great stock. I love them as a company. Little mixed up right now. Now, if they come down below the 8, I'm looking at 167 and 164 as the downside. On the upside, we're looking at 175 and not 82. So let me go ahead and put another line in here. Oh, passed it up. Okay. So we're looking at 175 and 179 are the 2 upside targets. Oh, Nick, is that where... Oh, okay. I got it. So Nick said that was in Italian. Okay, I understand. All right. So guys, I want to look at the market a little bit today. So what in the world is going on with the markets in oil and gas? And if you look at gas, holy mackerel, look at gas. What a jump day in gas. Oh my goodness gracious. Phenomenal, right? Well, what's happened? Hopefully some of you guys have heard a little bit about this and know what's going on there. They have said that we are looking at a potential of 15%. Right, hurricane, exactly. 15% of our gas supply being knocked off the books because of the hurricane. Right? Devastating is an understatement, what we're dealing with there. Right? Now, when you look at gas, and this is natural gas, right, is what this is. When you look at gas, right, every penny, or actually, it's not really penny, it's 0.001. So every 1,000th placeholder, so the last decimal, every penny of movement is $10. Right? We went from 2.88 up to 2.97. Right? Well, when you go 0.001, you're looking at a one, every 001 is $10 move. So look at the move that we've made here today. It is tremendous. Now, that's not really the most important part here, guys. The most important part is this. If you look at what happened here, right? This is right here at 10:45 today. We actually, a little bit earlier. These are 5-minute charts. We came down right here with a wick at 10:30 and tagged that line. We came pretty close to it at 10:35, at 10:45. Right there, we closed a little closer, long drawn-out wick. Right, closed a little bit closer to the next one, and then this one we stretched down and we bounced. We made it back above the previous high, and we pushed up to the moving averages and we failed. Now that is a pretty standard setup where the moving averages become some hesitation, and it is really shaking out the, what's the word? I'll use the word scaredy cats. It's the traders who are in it, but they're not 100% sure. But man, I'd like to be in this type of trade, and that move down shakes them out before we get the last bounce. 1, 2, 3 line move, guys. That move was tremendous. From 92.5 up to 97, right? It's a huge move, right? That was made in there. Great opportunity on it. Now, gas is an expensive vehicle because it is 10 cents for the third decimal point, right? But what a great move today. Great fib setup as well in there today. Oil, a little bit different on oil. Oil, if we look at it now, this dotted line right here, vertical line, is the changeover to Sunday, right? That Sunday's open. And what happened? We had a quick pop on Sunday, and then we failed, and we went sideways. We got a fail right around that 3 a.m., 2:30 a.m. time period, which dropped us down in the beginning of the European market, and then we just continued to fail. And then right around, what time is this? 7 a.m., 7:05, we had a moving average cross up, and we started to climb. We could not get up to the recent highs we had there, which lasted, got hours at that price point, and we failed. Right? And the fail that I'm talking about was right here. The moving average cross took place right here at this point. Right? Now, if you're the breakout trader, awesome. If you are the retracement trader, awesome. You got to pull back right here. The way that oil works is every penny is $10. Right? So if every penny is $10, if you took this retracement up to resistance, so let's say you're in at 40, 47.40, just to make life easier. Right? Move down, move down, and move down. Closed above the 8, I'm still in. The next one closes below the 8, I'm okay. I'm looking for 2 bars close above the 8 EMA. Right? What's happening right now? We didn't get that. We are still in this trade. So this trade came in from, what do we, 40? 47.40? 47.40 is the entry. And here we are, 46.22, we're still in. So that gives me 22.18, $1.18. Right? So what does that give me? Well, if you look at let me just allow the editing there. Okay. Perfect. All right. So if we look at oil, we have one contract. Number of ticks is 118. That's $1,180 to place that trade, in that trade. Now, as far as placing it, it all depends the broker that you're with. right, as far as how much cash they require from you. Just put that back up there. Okay, just make sure I'm not missing anybody. Okay, so as far as how much cash, that's really going to be predicated on your broker, right? And I lost my trading connection before, so I can't show you. But it's going to cost you anywhere between $2,000 and $4,000 ish to do this trade, right? And there are ways of doing it with less money. But guys, there are opportunities in multiple markets. So when you look at equities, right, and you get these days where the S&P 500 is down 3, right, which is where it is right now. The S&P is down 3. Okay, there's not a whole lot happening, right? So you're not getting big moves. And if we look here, if I sort by, I don't want to sort them out that way. But look, biggest move down is Baidu, right, of the stocks I'm watching. But when you look at Google, they're down $1. When you look at Priceline, it's up 72 cents. You got a dead day. So on days like today, there are other positions that you can still go out and trade, right, and take advantage of. That's kind of what I'm getting at there is you got to play the market at hand. Right? And the market right now is not necessarily equities, but there are some better movements in other positions. All right. So let me take you into my Trade Navigator. And I want to go ahead and put a highlight bar back on. Actually, no. Let's go over to template number 1. No moving averages. And let me put a highlight bar on this page here. All right. Beautiful. So guys, that date right there is the date of the last monster market movers I did. It was right on August 3rd. I do multiple candidates in there for different trading styles, from channels to trends to Fibonacci's and so forth. The simplest of all trading systems that I use is finding stocks that channel. And when I say the simplest, what I mean by that is the simplest for you guys to understand, where you're not pulling your hair out trying to come up with, well, how do I, if I don't have enough experience doing this type of strategy yet, it's a little more complex. Am I right? Am I wrong? Channel is channel is channel, especially when I give you the lines, right? So AIZ is a stock that had a decent channel to it. Not great, but decent. We had a good pop up, a pull down, a move back up. We came back into the middle, and I showed this a couple weeks ago, not on this stock, but how to trade these a couple weeks ago in Power Hour. And then we made our move back up. And we just hung there forever, right? Well, the orange bar is the day of the last monster market movers. This was a candidate on monster market movers, right? So what happened? We had closed away from resistance already. Okay, well, I'd like to be back up there. Well, the next day we push right up to resistance. We come down and we gap down the next day. We stretch up to that 105.03 level, and then we start to fail, right? And right about 104.5 is the entry into the trade, right? But that entry comes on this day. That's the entry, right? I exited half of the trade right about here, And the other half of the trade, I think, was on this day. Might have been yesterday, but I think it was Thursday. I have to go back and pull the numbers, right? But however you slice it, right? This position moved and netted us $3,625 on the move. And of course, everything I talk about is non-funded, right? It netted us $3,625 on the move, right? Then I went ahead and looked at MAC. Great channel. This one did it twice, right? This one gapped up, ran, and rolled back down. Now, you may or may not have caught that first move depending on the type of trader you are, right? Move, back and forth, back and forth. Well, guys, that's about a $2,000 move, even though it's 56.5 to 58.5 to 60.25. It's about a $2,000-ish move on that trade. So, and that's on the options price, and that's doing it twice. No, actually it wasn't. Sorry, my bad. So here we go. On the move up was 1,625. The move down was 2,250. So I was off on my numbers a little bit. All right, I'll do the calculations in a sec. All right, but it's a channel. That's all it is, guys. Look at the move. Right? Why do I? And I scale out of half the trade at the middle. Why? Look at here, guys. As we come down to support and we bounce, and then we fail, we come almost all the way back to resistance. Instead of fighting that, I'm out of half of the trade here, already locked in profit. Unless it gaps down against me a lot, I'm going to make a little bit of money. I'm going to break even. It's not going to cost me very much, if anything at all, by scaling out of half of the trade. Now, don't get me wrong. On a setup like this, yeah, it would have been more profitable to stay in the whole trade, but I get to sleep better at night. And I'm okay with sleeping better at night and not having to go ahead and hold a position all the way back down here. Right? No different here, guys. We took this bullish position up, and then you take the bearish one. As you take the bearish position, it bounces. Oh, let me get out, I'm wrong, and then it goes your way, right? So we scale out of half of the position there. And then we wind up with SPG. SPG broke out the next day, no harm, no foul. We talked about this one last month, that we've done it before. We're up here, no big deal. Get back inside, the wick broke through on this day right here. Let me just draw it. The wick broke through on that day, and then what happened? We gapped up on the open, down rather, on the open from where we closed, but we were still above that moving at the fib line. It's a fib tool above that resistance line. Sorry, we gapped up and we failed, and as we failed, right below there is where the entry to the trade is. Scaling out of half the trade in the middle, the other half down at the bottom. 52.5, 52.75, 53, 153, wherever your number is for getting out. Right? Each person has a different risk profile. If I told you make it 50 cents above support, you say, oh, that's too risky for me. I'm going to get out $1. Doesn't matter what I say the number is. It's what your risk profile says it is. Who are you as a trader? What are you comfortable with going to sleep at night and feeling good about it? Okay. This trade netted $5,875. So when I said before about $11,750, I was incorrect in my number. What it actually was $13,375. That's what those trades netted us. That's 4 trades on 3 stocks, on 3 positions. 4 trades, 3 positions. To do this, it was about, like I said, $14,000, $15,000, $16,000. Call it, say 16. $16,000 to do 10 contracts. You don't have the $16,000, you do $1,600. You would have made $1,337.50 on that $1,600 investment. No matter how you slice it, if you do a cash in over cash out, see if I can find a calculator here somewhere. There we go. So cash in my pocket, 13,375 divided by 16,000. 83.5% rate of return in just a short period of time. And if you look, guys, if you look, what did it take from when we entered the trade, which was here? 1, 2 days, I'm out of part of it. 3, 4, 5, 6, 7 days, I'm out of the whole trade. Right? If we go back and look at AIZ, my trades are not designed to be long-term. Right? Here's the entry. 1, 2, 3, 4, 5, 6, 7, 8 days we get out of half. 9, 10, 11, 12 days we're out of the whole trade. Right? And then in Mac, on Mac, what do we have, guys? 3 days up, 1, 2, 3, 4 days to the downside. Very quick. Every one of them. They are not meant to be drag it out, take my time on getting this done. I want this to happen as quickly as possible, right? Okay, so, guys, there's some confusion on the site and what you guys are seeing and where to find this workshop live. Guys, you've got to be registered and logged in. If it says log in, mine says log out, so I know I'm registered. I'm already in. If you're not logged in, you will not be able to get to Wealth Builders HQ TV. That is, and it's free login. Under technical analysis, here are the power hours. They're on, and they don't get up here as quick as they do on YouTube. I want you to go to YouTube and view them on YouTube. I put them here as a convenience, so all the technical analysis is in one place. Options, basics, futures, covered calls. We'll add some other tabs in here as well. But I want you to go here and learn more about what we do, right? And you'll see them here. I don't know if I will keep all of them here because this will become very extensive very quickly. When it comes to this, I may have to put in something to open power hour up, whether you can't see them all right? All right, so guys, the power hour workshop that we're here and now today, right? We're not doing one next week, so when you register again today for your next one, and you should, you'll get an email, about registering for it. When you do, you will be able to register for next week's class. But Monster Market Movers, guys, is coming up this week, and I'm going to drop this in the chat box for you, and you guys can go and take a look at it. You're going to receive an email from us with a discount, right? A discount code that you can use, right? And if you're from Lisa, you'll get an email. I already left her a message before. It's a little early her time. When we start, I left her a message of what we're doing today, so you should get an email from Lisa as well on what's happening there, guys. But here's the thing. When we could pull in $13,375, heck, you only did one trade of those 4. You did the smallest trade of all of them, and you brought in $1,625. I think you are making a huge mistake not learning how to take advantage of those types of things. And at the workshop, guys, I don't do a lot of teaching on the how, and the reason for it is it's already in Monster Market Movers page. So there's a dozen videos in here that equate to over 4 hours of training, right? And then, of course, you've got the workshop, right? Monster Market Movers, the Fibonacci video, the workshop manual, and the addendum manual, which comes out after the workshop, that you can get as well, right? So all of these training materials are available as soon as you register for the workshop. You'll have those all available to you. So I would encourage you to go ahead and look for that. That email should be coming out right as we're done here today. You should get an email with that link in it, with that coupon in it, the discount. Take advantage of it, guys. Come on in there and learn how I do what I do. This is about 16 hours of work on my part just to find the candidates. That's not putting it together. That's just finding the candidates, right? So come and hang out with us and learn how to do that. You'll have a blast at it, and you're going to get a ton of candidates. There were over there were about 50 channeling positions last month alone. Another 3 dozen that were trending, right? They're all identified. The lines are drawn on them. You're going to get to see them all in the workshop, right? So cool. Did you guys have some fun here today? Learn a little bit? I hope so. Cool. All right, good. It's like, wait a second, did I lose my microphone again? All right. Awesome. 111. Thank you, Robert. I appreciate that very, very much. So, ladies and gentlemen, that does it for today. So, here's the thing. Next week, Fibonacci Power, right? If you go into the members area, and again, it's free to get in there. You just got to register for the workshop, for the site. You go in there, you will see Fib Power is coming up Wednesday. Monster Market Movers is coming up Wednesday, right? If you click on Fibonacci Power, that's how you register for it, right there, okay? Go ahead and get registered for that free workshop. My graphics guy put a beautiful thing up there, the graphic. And if you go and look out in September, right, you will see where the Fibonacci Secrets Revealed is an advanced class. There's the other Fib Power, though, is on the 5th, all right? Very cool. And there is no E-mini Think Tank. We've got to get rid of that on there. There is no E-mini Think Tank on the 4th because it is a U.S. holiday. The markets are closed. Yeah, Russell, I'm excited about them. How many Monster Market Movers did you take in the past, Russell? Do you remember? $60? Yeah, I'm not surprised. I mean, I taught him for a long time. So I'm not surprised. Guys, Russell came back month after month after month to Monster Market Movers. Why? Because it's always different. Every single month there's something new. Every month there's something new. No, there is Power Hour in September still. We just haven't scheduled them. We just got to get into the calendar and do it. And this is not Mel, it's me. Yeah, Russell said the biggest value. Yeah, it is, because the amount of work I put into it and what you guys get out of it is you're getting 6.5 to 7 hours of video. Of course, 2 hours of it is live, but 6.5 to 7 hours of video is what this whole thing boils down to. Yeah. So, all right, ladies and gentlemen, I have got to go manage that oil trade. So let me go ahead and jump off. I've got one other alarm that popped while we're here. So let me go do that. But go into the members page, get that stuff, register for the Power Hour, register for the Fibonacci class, and I will see all of you. Well, this week coming up is holiday, so have a great Labor Day holiday. God bless, and I will see you all, hopefully, at Fib Power on Wednesday. All right, take care now, folks.